Once Terra Luna blew up and Three Arrows failed, all the people that had lent out money to crypto funds were like, hey, do we lend money to like any other people who are broke now? Maybe we should ask everyone to send the money back just to like check that they still have it. And then maybe we'll lend it out again afterwards.
In 27, the crypto market is still awash in red. Bitcoin hasn't reclaimed its all-time high. Altcoins keep peaking only to plunge again, and long-term holders joke that they're permanently broke. Sounds grim, right? Let's explore why crypto continues to slump all the way into 2027 in this video. No one can forget the devastating crash of 22, from the collapse of Terra Luna's ecosystem to the earth-shattering bankruptcy of FTX.
SBS. Sam Bankman-Fried.
Sam Bankman-Fried.
You run one of the biggest, certainly the fastest growing crypto exchanges.
Come 2023, we plunged into a full-blown crypto winter. Asset prices tanked, companies laid off staff by the thousands, and countless projects froze operations. Still, many clung to the hope of a familiar four-year cycle, that 2024-2025 would usher in a new uptrend, thanks to major events like the 2024 Bitcoin halving, the first approved spot Bitcoin ETF.
Hello, Bitcoiners. Thank you very much. Hello, it's good to be with you.
True enough, by late 2024, we saw a glimmer of green. Bitcoin even topped $100,000 briefly. In early February 2025 came the shocker. Bitcoin plunged from 105,000 to 92,000 in mere hours, dragging altcoins down to record lows. Over 2.3 billion was liquidated in a single day, an unprecedented crash, even though the news couldn't have been more bullish. A pro-crypto US administration, the halving had occurred, and spot ETFs were live. When the market flipped right after all that, investor confidence took a severe blow. Matt Hoogan, chief investment officer at Bitwise, even suggested the once reliable four-year cycle might be dead, and this bear market could stretch into a decade instead of just 4 years. Even the optimists wavered. Some analysts argued the four-year rhythm wasn't over, that we'd see a rally in 2025, followed by a winter in 2026, echoing 2017's macro signals. High inflation, despite Fed rate hikes, rising global liquidity, a weak dollar. But early 2025's events have tested that belief. After February's crash came more blows. At month's end, hackers stole $1.5 billion in Ethereum from Bybit, the largest hack in history, and US trade tensions flared with new tariffs, stoking fears of a full-blown trade war. To cap it off, on February 25th, Bitcoin fell below $90,000 for the first time since late 2024, hitting a 3-month low. The US tariffs poured gasoline on the fire after the hack, crushing what little confidence was left. BTC and ETH both fell over 7% in a day, and altcoins like Dogecoin, Solana, and Cardano fared even worse, erasing any notion that Bitcoin is a safe haven during turmoil. By Q1 2025, the outlook was bleak. Bitcoin hovered around 90K, down roughly half from its recent peak. Top altcoins had plunged 60 to 70%. Total crypto market cap had reverted to early 2024 levels, wiping out all of last year's gains. Investor sentiment was at rock bottom, with fear and greed indexes deep in extreme fear. Even rare positives, like the US planning a strategic Bitcoin reserve or spot Bitcoin ETFs starting trading, weren't enough to rally prices. In short, by early 2025, crypto was mired in an extended winter. The faint green at the end of 2024 was snuffed out by early 2025 storms. A perfect storm of past collapses, mega hacks, and harsh macro headwinds kept prices in a downward spiral. So why might this bear market drag on through 2027? What factors are freezing crypto's comeback? What to expect over the next 2 years? This is arguably what viewers most want to see. Even in a bearish scenario, we need a clear picture to brace our minds. Based on analyses from reputable sources and current signals, here's the projected crypto market landscape for 2025-2027. Many analysts believe this cycle's true bottom is still ahead. Bitcoin's roughly $80K floor in early 2025 may not be the final low. As Timothy Peterson notes, If US equities enter a downtrend, Bitcoin could fall another 30–35% from current levels, implying a potential bottom around $60–70K. Technical models also suggest BTC may revisit 2023 support zones. However, most experts agree it's unlikely to drop much below that range, since long-term holders and institutions will aggressively buy at attractive prices. Thus, a plausible scenario is that Bitcoin forms its cycle low between $60K and $70K in 2025–2026. Major altcoins, being more correlated and risk-sensitive, could fall further. Weak, utility-less tokens might lose 50–80% and even vanish entirely. 2025–2027 won't be a straight slide to the bottom. Expect intermittent rallies, enough to spark hope, but often to trap latecomers. For example, after touching $60–70K, Bitcoin could bounce back to around $90K, a 20–30% rise, on temporary positive news. Yet these recoveries may lack staying power, with prices weakening once the catalyst fades. Overall, BTC could trade in a narrowing $60K–90K range for an extended period before a clear trend emerges. By late 2027, if macro conditions improve, Bitcoin may slowly climb out of the bottom, but don't count on immediate all-time highs. A reasonable path is a stable base around $60–80K through 2025–2026, then a gradual pushback toward $100K in 27 as the market thaws. A true parabolic run likely awaits factors aligning after 27, e.g., a new economic cycle or the 28 halving. Volatility may still spike. Major hacks or scandals can still trigger double-digit drops. But absent a catastrophic event, expect a prolonged sideways market that feels frustratingly stuck. In this harsh market, clear winners and losers will emerge. Bitcoin is poised to grab market share as the least risky crypto. Investors will favor BTC over altcoins in uncertain times. Ethereum, though unlikely to make new highs, should hold number 2 thanks to its robust tech and ecosystem, even if price action remains flat. Other top chains, BNB, SOL, ADA, etc., may survive with real institutional backing, but will see value eroded without fresh adoption. Trend-chasing tokens, metaverse, low-quality GameFi will likely fade into obscurity. Conversely, projects quietly building through the winter, like Layer 2s, Arbitrum, Optimism, or next-gen chains, Aptos, Sui, could gain prominence, even if their token prices don't immediately reflect it. In a depressed market, few alts can rally sustainably without major breakthroughs. We could see Bitcoin dominance climb to around 50% at the cycle low, as in 2015 or 2019, a reshuffling of the top 10, and new names rising on true technological or community merits. In short, gold remains gold. Bitcoin and a handful of blue-chip tokens will be the safe havens, while smaller coins will struggle, and the weakest will be weeded out over these 2 years. Despite depressed prices, crypto won't be abandoned. Regulatory frameworks should strengthen. Under a Trump administration, the US approved spot Bitcoin ETFs and even floated a strategic Bitcoin reserve, signaling government acceptance. Europe's MECA comes into force, and hubs like Singapore and the UAE continue courting crypto firms. Expect tougher transparency requirements, e.g., proof of reserves for exchanges, and stricter stablecoin oversight. Simultaneously, institutional money may be quietly accumulating at low prices. Large funds like BlackRock and Fidelity will steadily build Bitcoin positions for long-term clients. Traditional banks and finance firms will further develop crypto infrastructure. These moves won't trigger an immediate bull market, but they lay the groundwork for the next cycle. Think of institutions plotting in the shadows until the market matures enough for a full-scale entry. So while headline prices look dreary, growing institutional participation is a key positive for post-2027. Over the next 2 years, black swan events remain possible. On the downside, a major stablecoin, e.g. USDT, losing its peg, a top exchange collapse, or a nation banning crypto could trigger deep, rapid crashes, potentially sending Bitcoin toward $40–50K in the short run. However, after prior shocks, the industry has better safeguards. On the upside, game-changing developments, an Ethereum ETF, Apple-Google crypto integration, or G20-level Bitcoin legalization could spark short-lived rallies. Yet amid a dominant downtrend, these events may only produce fleeting recoveries rather than trend reversals. A crypto winter lasting through 2027 won't be pleasant. stagnant prices, failing projects, and investor attrition. Yet it also forges tomorrow's strengths, higher quality projects, more resilient communities, clearer regulations, and matured technology. Winter's end and a crypto spring will arrive, but it won't reward the unprepared. It will favor those who endure, learn, and hold conviction. Remember, no winter lasts forever. When the cycle turns, survivors armed with experience, knowledge, and faith will reap the richest rewards. See you in 2027, hopefully smiling at the journey endured and proud to have held on to the finish line.